Hello traders. Based on my research on the YouTube users and subscribers who are into the trading, I can understand that most of them are looking for price action and price movement strategies. So to that, I have just come up with this strategy, and I'm going to explain that in this video. And also at the end of this video, I'm going to give you a script that you can use along with this with less indicators, and it's going to give you the buy and sell signals that you can utilize. So before we start, please note that this video is only for educational purpose, and whatever we discuss in this particular video, it is just a guideline or a framework, whatever you can call, but you cannot take this as an advice for trading. Okay, please do proper back testing and also do paper trading to get that confidence by yourself, and you have to take your own risk on the profit and loss that you will make. So no one is going to be responsible for your own profits and losses. Okay, so with that, let's get started. So we're going to look at the concept of price action or price movement. This is the topic, and we'll look at with tools available within TradingView and how we can utilize that. And I'll be using at least 2 indicators, and users who are not having a subscription with TradingView to use more than 2 indicators, you can subscribe for it, or I can give you a script that you can use, which is just 1 or 2 indicators that you can use in a free TradingView account. So wait till the end of the video, and I will give you that particular script that you can utilize. Great. So now get started. When we say price or price, it is nothing how price specific instruments behavior or specific price action, right? For example, if you look at this is on Friday the 13th December, how the price action has moved. You also need to apply certain concepts, for example like Dow theory, which really talks about higher highs, higher lows, lower highs, lower lows. So you need to be able to identify that. For example, if we just take this one day, you can see there is a level here. We will mark that with a horizontal line. If you look at the lowermost level for the day, which is here, but if you really look at this particular chart till the mid of the day, from the beginning of the day, the price went down to the lower low, and then it reached back to the same level where it started. If we are able to understand this and wait for this particular movement or a reversal or a retracement, we will be able to take 2 trades in this entire day. One is the selling of this instrument and buying of this instrument. All that you need to understand is that where does the reversal or a retracement happens, and which is the sideways market, right? Sideways movement. If you look at this particular section, this is a sideways movement. From here where it breaks and goes down, same way we can see here there is a consolidation here. After this consolidation, where it breaks the recent bigger candle, big bars. So there is a concept of big bar theory as well. I will talk about this another video. The way I would trade is the reversal happened, retracement happened, all those are fine, but is the consolidation going to continue or it's going to go up? How I will decide that? So I will wait for this particular high to be broken. So the high is broken here, I can take a trade from here. In the same way, for this particular sideways, I will wait for this particular break. After this break, I will do a sell trade here, and we need to look at it. And beyond this level, I would not take a trade because the momentum and the volatility of the market has reduced a lot, and I will show you that to you with an indicator. Quickly add a couple of indicators that I would like to show you and how we can utilize that to be confident and take the trade. First one I'm going to add is moving average exponential. Shortly it is called EMA, exponential moving average. Okay, and this one I have set it to, the default is 9. The first change I'm making is length is changed to 20, and I'm going to the style, I'm going to increase the thickness of this to level 2. You can keep this label or remove the label, that's up to you how you wanted to visualize this. Okay, I have removed that. One thing that you can see is the price was below the EMA till this level around 11 o'clock. That means if you're just using this exponential moving average with 20 period length, you may take a trade after this first 30 minutes, because I don't recommend anyone to take a trade in the first 30 minutes because the volatility will be so. Let's say for example, if you've taken a trade at 9 in the beginning, you would have definitely losses because big, that is, fortunately the direction of this towards the same way, but if this were reversed again here from here, it would have been a big loss again. So it's always better to look at the trend of the market, understand the first 15 minutes, 30 minutes how it goes. After that you can take a trade. Leave this first 3 candles and then see how this goes. Okay, you can skip minutes, you draw line here and another line here with the open and close of the first 5 minutes candle. Take the trade, breaks that are or this is another strategy you can follow. Let's move into the actual topic that we wanted to discuss. We will talk about the action and how we can utilize futures to take some confidence. So the first one is this: we have added moving average exponential with 20 length. Then which I wanted to add the H true range. What is this true range from trading view? Let's add that. Now, what is average true range? Average true range is nothing but it is going to track the volatility of this particular instrument. How is the price moving on an average? You can see here, as the market is down, their values increasing. So understand, ATR not really identifying the trend direction. It is going to only identify and measure the volatility of the instrument. Don't follow the trend direction of the ATR and thinking that if the ATR is going high, that means I should take a buy signal. No. ATR is going to talk about the volatility levels in the market. So if the ATR value is going high, that means there's going to be higher momentum, higher trending. That's the only understanding we should take from ATR. As you can see an example here, from this moment market was going high, take this range. In the same way, if you look at this, from this level, I'm going to put a horizontal line here. Till this level there has been a movement, but before that this area it was kind of sideways, but from this side it was moving higher. ATR is used to understand whether the market is trending or not. Okay, and also the strength of the instrument along with volume. Whenever the ATR is peaking up, you will also see volume peaking up, which is also an important thing that you should look at. So now let's add one more indicator, that is called pivot point standard. The indicators that I'm adding, these are all from trading view. So now we have added all the 3 indicators that we need for identifying an opportunity to take a trade. So please understand, it's not that 9:15 the market started, I need to take a trade. No, always look for an opportunity which is going to be a very high conviction trading, and then only take a trade. Okay, what are the things you look at? You will have to look at the trend of the market, the strength of the trend. The strength of the trend is going to come out from ATR. The line of the ATR needs to be going up gradually, and along with that you should be able to see the price also moving. How do you know that the price is moving? You should use the help of the EMA. The EMA should be either going towards the downwards or the upward. It cannot be like this. You see the previous day. This day I would never recommend anybody to take a trade. There are two things you can clearly see. One is the candles are very small in the 5 minutes, and we can even move it to 3 minutes. You will see, you will move it to 15 minutes, you will see the same thing compared to the other days. Let me go back to the 3 minutes. Secondly, look at the volume here. The volume is very low. For Nifty, at least the volume should be above 125,000. You look at the volume here for this particular candle, 133. So the entire day, this is the only candle that has given 125 and above. There's no other candle above 125 and above. Okay, so you should look for the volume as well. Okay, and the additional indicator is the ATR value has been on a straight line. It has never moved above or never trended above. Okay, we want to see ATR going up. That's when you can understand that there is a strength in the market. Okay, now let's quickly look at the opportunities and how we can take a trade. So there are 2-3 things you need to look at as we discussed. First of all, the EMA line should be trending up or trending down. Okay, that's when you can identify the trending day and it is not a sideways day. The second thing is the price is either above the EMA line for taking a buy signal, buy trade. The price should be below the EMA line for taking a sell trade. Okay, this is the second condition. Now the third condition is the reason why we added the pivot points. Pivot point as an indicator is nothing but it's going to give you the key levels for this particular day. Okay, the line that's here says the P is the main key level of this day. They're swinging every day as it's little the day it has come. That means where you see the pivot point line falling down the next day, that's indication to you that today it may be a bearish day. Okay, if the pivot point is little higher than the previous day, you can see here the pivot point is here, and also the next day the pivot point is here. So they are not moving anywhere. Even if you see the day, pivot point is around the same lines. That means the entire 3-4 days is a sideways day. You can also see here the pivot point was on 9th at this level and it had fallen down the next day. That means it's sideways and a bearish signal or a bearish sentiment. Okay, so understand the trend of the market on a day wise using the pivot point level. That's one good indicator for you that will tell you how the day is going to be. You can see the day started at S1. So what is S1 and what is R1? S1 is nothing but the support level 1. R1 is nothing but the resistance level 1. Okay, and pivot point is here. So the day started at support level 1 and started going down. Always keep your targets like this. If the day starts at a certain support level, it can be S1, S2 or S3, S4. In this, the very important level are S3 and R3. The way I will configure this particular indicator is I will keep pivot point, but I will remove S1, R1, S2, R2. Okay, to make it very clear chart. Okay, why did I do that is because most of the trending happens beyond S3 and R3. If the day doesn't touch either of this level, you can assume this is going to be a sideways day. The price broke the S3 level and fallen down. This is one good signal for you to take a trade. Okay, you can take a trade here whenever the price is below the EMA and the price also retraced. So when I say retraced, what really I mean here? You can see here the price was falling down and then it went up and then it came down. This is called retracement. Okay, you can also see a retracement this way here. The price came down and then it went back. It exactly touched the 20 period EMA and then it went back. Here it was trying to touch, but it went back sooner. These are all retracement points. You need to look for these minute price movements. This is exactly what you need to understand from price action and price movement strategies. How does the price action happens? Okay, one of the thing is retracement, the other one is reversal and breakouts. We have discussed the breakouts, pullbacks, trending in our previous video. If you have not seen, I will put a I mark here. You can look at that. Okay, now let's come to the point. So a retracement happened here. We also see that the price broke below S3. Then you can take a trade here. Then what is your target? Your target can be, the first target can be the next level. As you can see, a consolidation happened here. There has been a small consolidation that happened here. It is better to keep your first target here. If you want, you can trial your stop loss, and your stop loss will most probably get hit here because the price reversed and it started going up in a bullish direction. When will you confirm that it is a bullish direction? The price has to go above EMA, and there has to be an independent candle that should form without touching the EMA line. Second, it has to break one of the key levels from a pivot point standard perspective. Okay, let's say it has touched the S4 and it went back. So basically the price came, it did a consolidation at S4 level and it broke it back and went up in the bullish direction. One of the main thing you can see here is the ATR has been sideways here. That means the volatility was not that great here. The movement did not happen that much. And you can also see the same thing here, because they are all small candles as equal to the sideways market here, the consolidation market here. So it is better to wait for another break. Okay, where does the another break happen? It happened when it broke the S3 level, and you got multiple signals here. One is it's the price above EMA, it broke the S3 level again, and also the ATR spiked up. Next to important indicator and a signal is the volume also picked up a lot. Let me remove all this stuff. Okay, I have removed the drawings. As I said, you can look at the volume. The volume picked up to 3 times the minimum requirement, and this is where you should probably take a buy trade after this particular candle. And if you take the buy trade here, you can trial the stop loss whenever or wherever you see another consolidation. Okay, and because this particular place the price never moved beyond a certain level. Okay, and this is the best place to exit and close your day. Let's quickly summarize this. How are we going to take a trade? What are the signals? The first signal is the price has to be either above the EMA or below the EMA. The second signal is the EMA should be in a trending direction, either going up or going down, not as an example that you can see here the previous day. It cannot be like a straight line. Whenever the EMA is the straight line and the price is going up and down around the EMA line, don't take a trade. And you will be able to see the same thing with the ATR. ATR will also be almost like a straight line. Whenever the ATR behaves in that way, never take a trade. Then the next signal is pivot point signal. So the price has to break one of the key levels, importantly S3 or R3. It has to break from the pivot point. If the price is going up, it has to break R3. There can be a possibility that from the pivot point the price will go up, it will touch R3, do some consolidation here and then come down. And the same thing happened here. The price did not start at pivot point, but it started little lower at around S2 level, and it broke S3 level, it went down, did a consolidation at S4 level, and it went back. and broke S3 level, and this is another signal for you to get into a trade. Along with this, you will look at ATR's behavior. ATR should show up, spike up like this, which will be very good. The next and final signal is volume should support you. In general, the volume should be higher than the volume moving average. The red line that you see is nothing but the moving average of the volume. Okay, as you can see here, this is volume, green color. Volume MA is the volume moving average, which is calculated at a 30 period moving average length, which is default. You can keep it, you can change it, that's up to you. Let's look for these signals before we take a trade. Let's not take a trade because I need to take a trade today. This is what I would like to talk to you about today related to price action and price action strategies. A lot of our users are using TradingView to understand and analyze charts and take an informed decision whether I should take a trade or not, and various indicators are there to help us. But most of us don't have a subscription wherein we can add more than 2 indicators. In such scenarios, it will be difficult for us to follow this, even the strategy that we are talking about here, where I have 3 indicators: EMA, pivot points and ATR. So in this scenario, I'm going to help you by giving a Pine script, which is a TradingView indicator custom script that I have created. I will give that to you. I'm going to show you now how it works. Let's say I will just keep EMA and ATR. I'm going to remove pivot points. Let's say this is going to be your scenario. If you are not having a TradingView premium subscription, you will be able to add either of 2 indicators. Now I'm going to add the indicator that I have created, which is the retracement breakout strategy. I will explain you how this is going to work. But before going to the explanation of how it's going to work, I wanted to talk to you about the success rate of this particular indicator. And this indicator is going to be free. I'm just going to give you the script. You can add it, and I'm also going to show you how to add it. So let's look at the profit factor. That is the very important key thing that you should look at. And the next thing that you should look at is the average trade. The profit factor is nothing but the amount of money the strategy made for every unit of money it lost. Gross profits divided by gross losses. So from a mathematical perspective, you can understand that if this value is first of all positive, that means above 0, you're already profitable. Okay, but as per the industry standard, if this number is more than 1, you are at a very good profit levels. Okay, but this indicator at a 3 minutes time frame, it is performing at 2.32 profit factor with a very low drawdown. So drawdown is nothing but how many times you can take a trade and make loss. So you can see the explanation here. The greatest loss drawdown, that means the greatest possible loss the strategy had compared to its highest profits. That means out of 761 trades, this is the maximum loss that has happened. And look at the profit that it has made. It has made around 1,52,000 and above with 761 trades. In what time frame? You can look at the time frame here. It started from August to December. That's the time frame. So let's understand how we are going to take a trade with this specific indicator, which is going to be very easy, very simple. You just need to follow the buy sell signals that has been shown on the chart. Please note that there is no indicator in TradingView, or there is no indicator that is custom created by even the experts in the trading world. Nobody can guarantee you that that specific indicator is going to work 100%. There is going to be always a loss that we will make with any indicator. Nobody can guarantee that my indicator is going to work 100% all the time. As you can see, in a sideways market, this indicator gives you a lot of false signals. In a sideways market, this indicator is not going to work for you. So when you identify it is a sideways market, don't use this indicator. This indicator can be used only in a trending market. For example, you look at this last working day, last session, trading session, we can see a very clear good signals. At least the first two signals, if you take, there is no more trades you have to take. Again, the sideways market started here. The buy sell signals are very close. You need to identify the consolidation range, where it is getting consolidated, accumulated, that specific timeline. Never look at these buy and sell signals. It is going to be mostly false, but always you look for these buy and sell signals in a trending market. You will be able to identify. So as I was telling you, when I was using the other indicators, I talked about the retracement. The way this is going to work is, I'm going to add the pivot point again for you to understand. Pivot point standard exactly below the S2 level and exactly below the EMA level, there has been a retracement. The price slightly tried to go up, but it was pushed back again by the sellers, and that's when this particular indicator is going to give you a sell signal, and it is following till the time the price broke above the EMA. You can wait till here and close your trade here, or you can actually close at this consolidation level, or you can have your stop loss, and stop loss will get hit obviously around this place. The exit of this particular trade is something that you can decide. We are more giving importance here about the entry signals. So the entry signal for the buy signal is here. So now this is a very simple indicator. There's nothing much more to explain about this. Follow the buy sell signals using this particular indicator and you will be all right, but use this indicator only in a trending market only. So how we are going to add this? It's very simple. Assume that I'm going to give you this code. All that you need to do is go to the trading view, say you're going to create a new strategy. This is not an indicator, this is a strategy. What is the difference? Indicator is going to give you just buy and sell signal. It's not going to give you the backtest data. As we saw the backtest data, this is a strategy. So what you're going to do, create new, select strategy, erase whatever was here and paste this stuff here, and then save. When you save, it's going to ask you to give it a new name. Give a new name, and then you can add it to the chart using this option. That's it. The way I'm going to give this to you is, I will request you to join my Telegram channel. I'm going to put the Telegram link in the description. Join the Telegram group. The text version of this particular indicator will already be there. Even if it's not there, you can just ping and I can share it with you. Great. I think we are done for the day. If you have any comments, please add it in the comment section. Please like and share this video. Subscribe to this video, because I can see that most of the viewers of the videos that I am posting, around 80% of the people are viewing, liking. Thank you for that, but I am not seeing them subscribing. So please subscribe to the channel. It will help me and motivate me a lot to do more strategies like this for you. Thank you so much. Let's catch up in our next video. Thank you.